Anthony, you're always actively looking for value, whether it be in the stock market or in companies to invest in that you think have got potential. What are the most important things that you look for when you're looking for investment opportunities in a small to medium business?
Uh, one is obviously understanding that they've got a product or a service that that you think has some longevity, that it's not just going to be something that's a bit too fashionable and might come and go too quickly. Uh, but ultimately, it comes down to the management team and the ability to believe that they can execute on a plan, um, and have some realism in their expectations. So I do get a lot of people who come looking for money, and it's amazing how often you see these really sort of fabulous numbers. I'll tell you what, I've got this great idea. You give me $2 million, and I'll give you 5% of my company, and then we'll make it all happen. Whereas the truth is, the value is in the execution, not in the idea. So it's people who come with a realistic expectation that they've got a whole lot of hard work ahead of them to deliver, and that without the capital, they can't deliver. So together, you need to be able to make it work, and both hopefully succeed together. So it's when someone comes in with a realistic expectation of how much hard work there is, and on valuation, at that point, it's worth spending the time and effort to get to understand whether the opportunity is real or not, and something worth backing.
So many of those items like management team, consistency of execution, you can't see those in the numbers. So how do you normally go about making an assessment of those sorts of things?
Well, some of it is just about understanding what the background of the people is, where they've been, what they've done. Um, you might do a little bit of digging on who knows them, and check some references. It, it's funny how even a lot of people apply for a job and they put a referee down. And it's amazing how many companies don't even bother checking a reference for an employee. But when you're actually going to back people with significant money, you really got to do some reference checking on the people, and I suppose it's trying to understand whether they've got a comprehensive skills base around them. And if they don't, then it's trying to assess where the gaps might be. A lot of people are very good on the technical side of where they've come from. You get a lot of engineers who are good at the engineering but have no idea about marketing and sales. So if they come and tell you that they don't know marketing and sales, but they're going to find people who do, that's a good sign. Whereas you get some who'll come along and just say, no, 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 I mean, I can do it all, even though they've never had that expertise in the past.
Good. So, and then when you say longevity, when you're looking at a business, what time frame are you looking at, Anthony, in terms of assessing how they've gone? Is that the last year? Is that the last 3 years? What sort of, in this very dynamic environment, what do you consider a reasonable time frame?
Well, I prefer to invest in things that are already generating some sales, whether that's been for the last 6 or 12 months, or whether it's been for a number of years. I probably have, over time, had a preference for longer rather than shorter. I've just seen it seems to be sort of easier to assess when someone's been around for 2 or 3 years than in the last 6 or 12 months. But if they've got a product that they're generating some sales, um, then that's a lot more attractive to me than people who've come in with a sort of a concept or an idea, or even if they've developed it to a point where it's just ready to start going out into the marketplace. It becomes a question of backing whether there is actually a market for it or not. I'd rather see that someone's prepared to pay for it already. If they are, then I'm sure there are others who will be too.
Now, Anthony, you did pull together quite a good deal for a company that you've invested in that's gone quite well. Are you able to share that? And perhaps looking back on that, what were the elements that you saw that sort of reflects on what you've just mentioned there?
So, yeah, a couple of years ago, we put together a group, and we ended up buying a fairly successful business, a company called MSP Photography. It's a school photography business. It had been around for about 15 or 20 years, so it had certainly proven that it was sustainable and making good money. Um, it just had a management team that was a bit tired and needed a bit of a rev up. So when after we bought it, we put in a couple of new people, got some new marketing initiatives, and tried to help push that along, which was great. But in the end, we then partnered with a group called Compass Education that were in software for schools. So there was a strategic alignment between the two businesses, and coming up with a sort of a joint venture partnership, which in which we got the software company to build some really great software for the photography business, and use the photography's reach into the schools to help build a reach for the software company to expand its presence in the Australian school software market. And by putting the two alongside each other, it's allowed them both to flourish. So it was a good deal for both groups, and I think now they're still busy finalising some of the software, but it's going to be I think a pretty good outcome for both parties.
Well, it seems, with the benefit of hindsight, that was almost the perfect fusion. But quite often with these partnership discussions, it doesn't always eventuate, because you don't always get sort of everyone singing from the same hymn sheet.
Look, and don't get me wrong, there's certainly some hiccups that have sort of popped up along the way in that one as well. The software build wasn't quite as easy or as smooth as the software company thought it might be, and kind of getting the sales team to from the photography side to actually start to sell other products or introduce other products took a bit of a bit of work, just to get everyone to understand why there was a benefit for the school in having the two systems, the photos that worked directly into the software package that gives the school a real advantage. So it was an education process that everyone had to go through as well, understanding why there's a benefit. And again, a lot of that was thinking about the customer. It's, what does the school want? What do the administrators in the school want? When you can make their life easy, then suddenly it becomes a much easier sell. You're going in there saying, we can do the photos will go straight into the system. Then suddenly the school says, oh, great, I'll take both together. It's a lot better and easier than trying to sell one product and another product separately. So it took a lot of work, though, to get them there. Everyone.
It's interesting when you become a bit more ingrained with your product and the customers, that you start to even use their language, and it really does help that integration into whatever market you're going for. Now, Heath, on the other side of things, you've successfully exited out of two companies. Looking back on those, where do you think you made the best winning moves to create the most value for either one of those companies or both of them?
Yeah, definitely the story for both businesses were quite similar. It was an investment in product development. We felt that it was difficult to spend our marketing dollars really accurately, but we just felt that the more we invested in the product and the better the product became, the more word of mouth that we received, and the more people used it, and then it continued. So it's very much a word of mouth businesses based on great products. But I guess the challenge with that is, it means you have to invest in building those products, and that means engineers and designers and deployment resources to do that. So it's a balance between, while we want to continue to build a great product, so let's invest in it, but that investment is taking money off the bottom line. So when we went to sell both businesses, ultimately they were sold on a profit multiple, or effectively that's how they were valued. The partners that were buying them, they ultimately said, well, look, what's a multiple on their profits? So I think in hindsight, we created huge amounts of value by investing in the products, but I think perhaps being a bit more strategic about that product development may have generated more profits, because we probably did some product development that was not customer led. It was more idea driven by myself. I'm guilty of it. This is a great idea, let's do it, but not really understanding the customer enough. And so we probably invested in things that probably didn't add heaps of value, and possibly took away from the size of the eggs that we received. So it's a really delicate balance to try and get it right. But great product for us was always the way in which we developed value, and it's understand. That comes back down to understanding your customers, to trying to get that right.
So how do you get the balance, Heath, between database differentiation? If you had your time again to invest in one or the other, I know it depends. Which one would you go?
Yeah. I'd spend a lot more time user testing and actually spending time with users, getting feedback from them, showing them new features, and talking to them, and in that kind of design level, bringing the customers in. We certainly got towards the last business, the punters business, towards the end, we became quite good at that in terms of being able to communicate with customers and show them prototypes of features and get their feedback on it. And that was hugely valuable. And, obviously a lot's changed over the 20 years since I've been sort of involved in the web. So we sort of got better towards that at the end. But every dollar that we spent in terms of concept testing and user focus tests and was hugely valuable to make sure you get the investment right in product development.
Well, that's interesting, because I don't think any of our customers invest in that. As a principle, it's always sort of rush and get it out the door, and then look at the information afterwards, and then probably be disillusioned by the results. Whereas, because I suppose it's easier to do the latter than the former. What do you think, Anthony? Differentiation or database?
Both.
Come on, you're not a man that sits on the fence. Come on.
Yeah. I'm not always so sure that being a differentiated product is as important as people think. I think, sometimes being, if you have a look, an awful lot of clothes are sold by being exactly the same as what, people see or like that's out there. So I think sometimes, you might need a little bit of a difference in the way you execute things. So I'd probably say database, right? I think there's I come back to valuing the execution. I think if you've got a customer database, if you can work the people that you've got, if you can deliver them what they need, it doesn't actually have to be that different. You just got to be able to make sure that you're executing it and executing it well. So, I think there are plenty of businesses that are Me Too's that can do something really well that will end up being the winner.
Fantastic. Well, thanks, Heath. Thanks, Anthony. Really appreciate your time. There's some really good insights. I could certainly reflect on a number of clients that have done pretty well in the pivot environment. They certainly focused a lot on differentiation, but they also focused on started off being like this with customers and ended up being really a very tight slither. And every time they did that, they ended up getting more success, and ironically didn't spend as much on advertising. So that's always a good thing too. Thanks, guys. We're going to have a guest appearance from your dogs as well, or they're gone?
They've gone back to sleep, I'm afraid.
Okay. Hopefully we didn't put them to sleep.
Yeah, maybe it was me.
Thanks, guys. Really appreciate it.
Thanks,
Cheers. Bye.